Good Monday afternoon, everyone. Kip Harridge here with the daily VRA investing update. Hope you all are having a good morning. Hope you had a good weekend. Big day up in the markets today as I speak right now. Dow Jones up 672 points. That means a 1,300-point rally from the lows on Friday at midday. Jim Cramer must have turned bearish right at midday on Friday to account for this move higher. Look, is it a bear market rally? You know what? Time will tell. Saw some interesting things, though. Before we talk about today, let me tell you what happened on Friday, because it's happened before, and history often rhymes, if not repeats, in the markets, for sure. We've had three previous cases in the last, 13 years, where the S&P 500 has fallen to an intraday loss of at least 20%, making it an official bear market, right? Except it didn't close at a 20% loss. That happened on Friday, right? So we fell more than 20% intraday, but closed above it. That happened three times before in the last 13 years, 1998, 2011, and 2018. What's interesting about that is that when those false breakdowns happened, those false bear markets happened, the S&P 500 then turned on a dime and proceeded to move on into like a brand new bull market. Never again even tested those lows. So we'll see if it happens again. I find those kind of things interesting. We'll see what happens here. I don't think anybody complained if that was the case here. Also, this is interesting too. We just had 7 straight down weeks, right, in the S&P 500, 7 in a row. Brutal decline. Well, that too has happened 3 times in the last 50 years. What happened after that? In one case, the market was flat over the next year. But in 2 of the cases, the market over the next year was up more than 33%. So a lot of the times, as Tyler said in his podcast on Friday, bear markets lead to bull markets. Sharp declines lead to sharper advances because the markets go up over time. They just do. And this is when smart money looks for buying opportunities. So we'll see what happens here. I also got to tell you, we talked about this last week. The sentiment surveys, my goodness, we keep getting more and more of these that are extreme fear, like ultra bearishness. And you know what that means as a contrarian. When everybody's bearish, a contrarian has no choice. A contrarian must be bullish, or you're not a contrarian. That's just the definition of it. And over the weekend, we got the Bank of America bull bear indicator also hit extreme bearishness. The Goldman Sachs sentiment indicator also hit extreme stretch, extreme bearishness. And again, that goes with last week's readings from the AAI Investor Sentiment Survey in Fear and Greed, right? Both in extreme fear territory. So we're seeing that's 4 right there, right? Not to mention the fact that at Bank of America's 300 money managers they work with, they have more cash than they've had at almost any time in history. Like one of them, they're like tied for one of the 8 most bearish times in 25 years. After that, the markets have zoomed higher. We're seeing all of these signs again that say this is not the time to be bearish, just based on history and based on the level of bearishness. Now, again, is it just a bear market rally? You know what? We'll see, right? We certainly have things going against us. We got the biggie is we're fighting the Fed. The Fed is not our friend anymore. We're fighting the Fed. We're fighting the tape because obviously we are in a bear market. We've seen extreme damage done to so many stocks, but that's happened over a long period of time. Like, again, we've talked about here often, the ARK, Kathy Wood's Innovation Fund, down 77%. That's the .com disaster. That's the blow up of .com. 77% decline in NASDAQ beginning in 2000. That just happened to Kathy Woods over almost the exact same time frame. So we're seeing these parallels that you have to, as a long-term market watcher, I have to go, well, this smells familiar, And also this weekend, Barron's, this is one of the classic contrary indicators. Barron's came out on the cover with a picture of a bear claw, says "Don't get mauled." Again, these are all the signs that a contrarian looks for to say, you know what, this thing is at least over short term. And who knows? You never know. Once a rally starts going higher, again, we're up 1,300 points now, more than that now, in what is it, 8 hours of trading? Less than? Interesting things happen. A lot of cash on the sidelines. As far as today goes, again, good day today. Internals are good. NASDAQ is not leading today. Dow Jones is leading today higher with the S&P 500 right behind it. But NASDAQ has been leading. The semis have been leading. ARK has been leading. So we'll see what fleshes out here. What else today? of interest, I just point out the bank stocks are red hot today. If you're looking for a sector, BKX today up 5%, 5% on the BKX. JP Morgan up a big 7% today. Of course, bank stocks have been destroyed as well. What else, folks? That's pretty much it. Look, as always, appreciate you watching. We'll see what happens here. Make sure to join us for our podcast at the market close today. And until then, we'll see you back here again tomorrow. Have a great day, everybody. Thanks again for watching.